Hello and welcome to another weekly update and review. Today is September the 8th, Saturday. We're going to take a look at the last week's performance. We started our new strategy on the 30th, so we have about a week worth of trading, and it's significantly different from what we've been doing before. So I have to give you some explanations and make sure you can follow around what we're doing. Let's take a look at the market. As you can see, it was straight down all week pretty much, and we were able to place our second naked put part of the strategy yesterday. So we'll see how the market works on Monday, Tuesday, and all of the next week. But we still have enough power to shoot another one if the market goes down, which would be probably ideal if the VIX spikes up to somewhere in this neighborhood, and we get some juicy premiums to sell. We'll be doing that. Otherwise, we'll just wait it out. This strategy is significantly less active than the previous one, so there could be long stretches of time that we don't do much. So we might have less of these weekly updates and reviews, because I don't know if I'll be doing it if there is nothing really going on. But for right now, let's take a look at the plan. Now, we don't want to forget what happened beginning of August, and we want to have that in back of our mind, which is also the reason why we did some changes, because previous strategy was susceptible to some of the bad things that I wanted to improve upon, and the UOTS 2.0 addresses those, and I'll go into more details. And shortly after this, I'll be making another video to show some hidden benefits of UOTS 2.0 and maybe visually break it down to give a context around, because it's important to understand the context around this trade. Nobody does it like this, so it's not something that you're used to seeing. Like everybody sells, 1-1x or strangles and butterflies and things like that. Everybody's familiar with that, but I don't know if anybody that's doing this. This is my trade. I developed it with the particular goals in mind, but it is different, and it is more of an active investing type of a strategy, or if you prefer, passive trading type of a strategy, where there are long stretches of time we just sit on our hands and wait for the market to pull back, and then as they say, money is made when the blood is on the street. And we want to make sure that we are able to pull the trigger when the blood is on the street, which might happen next week. So we'll see. Let's go back to this. So as we finished right here with this on the 30th, 47,584. And I started a completely new spreadsheet for this strategy. These are the two naked puts that we have so far. One we put on the 29th of August, and then another one on the 6th. And this one has been rolled 3 times already, so we collected some theta along the way. And the second one is basically all extrinsic value, because at the time the market was above 54.60. So this was $470 pure extrinsic value that we're trying to collect over coming weeks. And for the performance, now this is work in progress. I'm working on this spreadsheet. I'm going to fine tune it to fit fit the strategy properly, and then we'll also have everything visualized here like we had before. But starting last week, as you can see, market was down 4.11%. We're down only 0.32. Now, to be fair, this is not all due to the current strategy, and I'll show you what I mean by that. We have a bunch of leftover put debit spreads from the previous strategy, and as those were bleeding a little bit of money over the last couple of weeks when the market was going up, now they're showing some profits. And if you can click on any of those, you will see that they're actually showing some green around. So if it was just, if we can just forget about them and not count on them at all, let's close this. These are the two trades here that we currently have. So if we were to close these two positions, it would cost us $347. So just to give you an idea of the current, the actual loss, because right now it would show a little bit better than it is. So what did I say? 347. So 347, and then if you have total credit of 823, and that's in dollars. So let me just do a little this one. So 823 divided by 5 equals this. This is what we collected, and then minus current 347, which we would have to pay, and then times 5. So we're down $912 overall. And then if we have 912 divided by 47,000, and then times 100 for the percentage. So 1.95, call it 2%. So we are down 2%, market down 4%. So our performance is about, I mean, we're down about half what the market is, which is obviously good. What's more interesting though is that we have, let me go back to this. Let's just take a look at those positions again. And if we go to close them, and as you can see, that's the one right here. And let's assume those are the only ones that we have in the account. And let's say that they're actually being sold like they are. The cost obviously is the same. But as you can see here, they're bringing 68 SPY weighted deltas to the account, and they're bringing around 13 times 6 times 5, so 65, roughly 1 for 1, 65 in theta, because this one has to be multiplied by 5 by the multiplier. This one doesn't have to be. This one is already done. Okay, so in addition to that, if you take a look here, we're under 3,000 in buying power for those two naked puts. And if you take a look overall, it says here 2.7. Obviously, there is some positive influence from the put debit spread. So we're ignoring those and just going with 3,000, right? So if you take 3,000 divided by 47,000 roughly, and then multiplied by 100, it would give you around 6-7% in buying power. So keep that in mind. We have 6% buying power usage. We're collecting, and let's take a look at that. At the moment, we have 68 divided by 47,000 times 100, around 0.15 in delta for the account, and 0.15. And if we go and compare that, and I think this is pretty interesting and telling, just to compare I have this recorded. So if you go back here, as you can see, our delta here was, in this column. So let's say right here, we had 0.15 or 0.18 in delta for the account, and somewhat less theta. Okay, but let's ignore that. So we currently have even more theta than we used to have. But if you have a look here, we were running over 12x notional exposure leverage. We had 12-to-1 leverage, which means we are carrying significant risk of ruin in case of a major pullback. And with the current strategy, if you have a look here, we're carrying 1.18, so 1.18x notional exposure at the moment. So we can withstand any kind of a pullback or VIX increase with this while collecting the same or more theta and having the same or similar delta exposure, which is what we want. We want to stay positive overall still, because we do hope that market will eventually return and we'll collect that theta, that delta on the way back up. And then as well, if you look at the buying power at the same time, it was somewhere, well, at that time it was 18, but you can see how it's significantly higher than what it is right now. And I think this is pretty important and something to keep in mind. As I said, we have plenty of buying power and otherwise leverage power to shoot another bullet if the VIX spikes from here, which we would hope that it goes somewhere. If it goes to somewhere in the over 30, which is our goal for the third strike, it would be ideal, because then we would be able to sell a really juicy premium here, and then that would be it. But I think that's enough for now. Stay tuned for the next video. I'll break down a little bit more about some hidden benefits of the strategy, and I'll visualize it for you so that you have a better idea. But if you keep in mind, if you're looking for an active daily trading strategy, this is not it. This is more of your improvement for your long-term investments. And if you like the video, if you find it useful, make sure you like it, subscribe as well, and join our Discord. Link is in the description below. Have a fantastic rest of the weekend.